Mish Snyder, CEO, Market Gauge, Mish Market, Mish.
Good
Let's
morning.
pull it back. Mish, Market Minute. Mish, how you doing today?
I'm good. Just waking up.
Yeah, so you're a couple hours earlier. We always appreciate you getting up bright and early to come to the show. Let's talk broad here for a second. We do have the S&P, the Spider, and the triple Qs just breaking out, making two all-time highs, but you're seeing some divergence with the Dow Jones and IWM.
Yeah.
Why aren't they playing nice?
You know, I'm not necessarily sure why. I would think that there's still a lot of fear of tariffs and inflation that have something to do with it. But it is interesting to me because I'm hoping we're not seeing a repeat of what happened in January. It looks a little bit stronger than it did then. But nonetheless, what happened, we like to divide the year into two 6-month tranches, January 6-month calendar range, July 6-month calendar range. And the July 6-month calendar range reset in the middle of July, number one, and number two is in January after we had that in a strong admin year. Usually when there's a new administration, it goes very well. We had that initial rally in January. Everybody got like super bullish. And then granny retail started to roll over, IWM, and then of course the whole market followed. So what we're seeing now is not quite as similar, but still something to keep an eye on, which is SPYs and Qs are just flying through. But IWM still hasn't gotten through or held over the 6-month calendar range high, which is around that 226, 227 level. XRT is flirting with it. It's around 8170, but it still hasn't convincingly gone through. So that's grandma and grandpa, right? They're still not involved. And if the whole notion of this administration is to bring things back to the domestic U.S., we have to see the small caps and retail involved. Now, they're not uninvolved. They're just not fully involved yet. And then transportation is in the middle of the range. IBB, believe it or not, maybe today will change the equation because of Novo Nordisk, but that was above. Semiconductors are just scraping above it. It has to get through, well, today it'll gap up above it, 293. So, we're like sitting there. And so what does that tell you? Either this is going to be a SPY Q, keep going, and everything else will just kind of hang out, or the others will start to catch up, or the others will roll over because the selling starts to come into the market for whatever disappointment that happens, and everything starts to roll over as well. We don't know that yet. So I've kind of been sort of a little bit of a laid back right here in the summer doldrums, low volume, until we see more clearly.
And what kind of technical indicators or what kind of timing are you using to for these moves in the IWM and also I'm looking at the monthlies, and you look at this monthlies in the diamonds, and there is just 1, 2, 3, 4, 5 monthly highs in the same area. IWM not as clear on the monthlies moving up. Is it more of a timing thing or more of a price action?
I'd say a little bit of both. And this is not to say that I'm bearish at all. This is a market where clearly what's been so interesting is how the retail investors have taken over. There's a vibe on a group or a vibe on a stock. It goes up. It doesn't even really matter. In fact, the smarter you are, maybe the more disadvantaged you were this year. You know what I mean? The more you overthink things, you miss the boat. So, when it comes down to small caps, I'm not trying to overthink it, but what I'm saying is that when you have that line in the sand, and that would be on a daily basis, this 226, 227, and we keep trying to pop through it, but we sell off, at least it keeps me from screaming rotation, certainly not, AI-driven market, absolutely, with certain pockets here and there that are also doing well, and I could totally shift. We could either see IWM blast through, in which case I think you'll have a tremendous opportunity in a lot of stocks that haven't participated, or this could be the big ball and chain, and that's That's where the patience and the timing is, but that's also where the price comes into it.
When does common sense start working again here, Mish? Or didn't the markets never trade on common sense? Maybe they never did.
They never really did. I think it's really this year, though, screaming in your face, like, guys, stop overthinking. I mean, people start to look pretty foolish. All the cycle people and all the economists and, the bubble doom and gloomers, we're going to have this bubble, we're going to have that bubble. We're not having any bubbles. And in fact, that doesn't mean we won't. The things that I like to look at is like the small, the long bonds. We've talked about the long bonds. I think the last time we talked on STN, I said, I think TLT bottomed. I think yields are going lower. It was the most unpopular opinion at the time. And now look where we are. It looks like we're flirting with that 50, and it looks like we get through 87 in the TLTs, it's going to go. And the question is why? Does it make any sense? No. But what we know is that this is what this administration wants. They want lower rates. I mean, every other headline has been Powell needs to lower the rates. He even went to visit Powell last week. God knows what they're talking about. But what we know is yields are softening. FOMC is tomorrow. I don't think anything dramatic is going to come out of it, but it doesn't matter. If the momentum starts to go in the way of TLT's rallying, don't overthink. Follow it. And then think,
Mish,
what happens with yields going lower? Go ahead, Dennis. I'm sorry.
What happens when Powell doesn't lower rates tomorrow? Because he's not lowering rates tomorrow. We looked at the Fed tool, and there's like a 2.5% chance. I mean, they're not even, the commentary, hasn't even really went to talk about lowering rates here yet. There's still kind of almost a neutral stance here. So there's no way they're lowering rates. Trump believes, because he even says, I think he's going to do the right thing. He tweeted that like yesterday. So Trump is going to lose it when Powell does not lower rates tomorrow. He's actually going to go on a tweet storm. Like, this is not even like a prediction. This is almost to a point where it's probably going to be fact. He's going to go on a tweet storm tomorrow night. What does the tweet storm do when he calls late and then he starts to talk about firing him again and doing all this stuff? Does it spook the market, or does the market just ignore it?
I'm not so sure that's going to happen, because whatever they talked about last week, I'm sure it's not going to be the big shock to Trump, whatever Powell does. And Powell may have said to him, listen, we got to keep things status quo for right now. And if everything looks okay, we'll lower them in September. And Trump might have been all right with that. We don't really know what happened.
I don't think so. I'm on the other camp on that one.
All I could say is that whether he lowers rates or not, whether Trump goes on a storm of bashing Powell or not, what we're seeing is the trend has flipped to higher yields or stay pat yields to lower yields. And now it's just a matter of the velocity of how fast we get lower yields, and then what happens in terms of the Fed backing that up. I think perception, this is exactly what we're talking about. Perception is everything.
Yeah.
And if the perception is that no matter what he says and no matter what Powell says, he's still going to get the way of lower yields, and I don't even want to argue whether that's a good thing or a bad thing, then lower yields are going to come. And I think that's what you've learned this year. I mean, he's banged everything he's wanted. He's been banging about and very transparent about, Bitcoin, Ethereum, stablecoin, the big beautiful bill, the tariffs. Everything has been really basically turning out to be exactly what he says, which is an unusual situation that the leader of the market turns out to be the president of the United States. But don't fight it. So I don't care what happens tomorrow. I think if these TLTs can get through 87, we're seeing the writing on the wall.
Does the market need lower rates? Do we need lower rates at this time? Am I this old school that you need lower rates at a time when an economy is stalling? I mean, where are we? I mean, of course it gets debt down and it helps companies, but I mean, it's like what happens if we really go in get some bad numbers? Do we need lower interest rates for this market?
Well, again, it's yes and no. There are certain pockets of the economy that would certainly benefit from lower rates. I mean, we're looking at housing, right? That would the obvious place. You might see a boost in refi and new buyers coming in, trying to lock in anything that happens with lower rates, fearful that it won't last. In terms of debt and things like that, I mean, that's the biggest thing, is that our second largest expense in the United States is the interest payments we make on our debt, which of course we know is huge, approaching 37 trillion. And with lower rates, it makes it a more affordable way to pay down that debt. Some people are saying he wants a level of inflation because you can inflate your way out of the debt. I'm not an economist to be able to explain that to every nuance, but it kind of makes a little bit of sense. If you get people spending more money, but the dollar right now is strong, so you've got stronger, let's just say, not strong. So it's I think that it could goose inflation, but what I'm saying is inflation I don't think he cares about a 2.5% or even a 2% inflation. Years ago, I found this brilliant guy who wrote an article about at some point they're going to change what their expectation is for inflation rate from 2% to 3%. Because if you have a growing global economy or a growing U.S. economy, 2% may not necessarily be realistic. So who the heck knows? That's, you got to be prepared for everything right now.
Okay, you talked to us a while ago about the beauty trade, and Michael Berry hopped on it here. I'm looking. Estee Lauder's had a move up from 55 to 93. Elf Beauty, I don't know if that. Yep, that's participating in it as well. Ulta,
Ulta, yeah.
Yep, Ulta Beauty here.
People haven't talked about this stock. I'm amazed. This stock has gone up over $150, and yet you never hear anybody talk about it, except for maybe me and you and a couple of other people that allow me to talk about it when I go on. But yeah, this thing has been, what is this showing you? People are out there buying makeup and hair products and things like that.
And you mentioned briefly at the top the XBI. I mean, mixed news. Nova Nordisk getting absolutely slammed today. Oh boy, on Wegovy shortage. SRPT Sarepta. I'm sure you love. You love trading that stock. But overall, looking at the IBB trying to break out here, XBI, definitely sectors that need lower rates. Wow, consolidating up near the top of its range. And how many times have we seen this? XBI, IBB are up near the top of a range, and then they just get slammed back down again. Can these sectors get moving without lower rates?
Well, this is also in the crosshairs of tariff talk. We're going to do 200% tariffs on pharmaceuticals outside of this country. And so that alone has kept me out of the biotech space. I mean, I watched Eli Lilly look like it was going to go to the moon yesterday. The thing broke out over 810. And now with this Novo Nordisk story, I'm looking at Lilly now, it's back down to 794. Now that's not exactly crushed, but it certainly would be painful if you bought it at 810 yesterday. And I've been sort of, again, I can't stress this enough. Just listen to what is coming out of the administration and don't fade it. So when they're talking about 200% tariffs, I'm not sitting there going, oh, taco. I'm going, you know what? I want to stay out of the biotech space right now until we see, oh, well, it's not 200%. It's really going to be 10% or 15% or what have you. I've stayed, and between him and RFK Jr., I do not want to step into that big thorny mess. But what I will say is that regardless of what the drug companies do, the diet drugs, and we know, are here to stay. This will work out at some point. When that does, we'll be more inclined to get in. And like you're saying, the big impact on that has been the companies that have benefited from so many people who have already lost weight and intend to stay that way. And that's why I've been more in the retail space. Even Stitch Fix, I think we talked about that last time. It was trading at like 350. It got up to close to 550. It's coming in slightly lower today, but it's been over 5. these are the kind of companies that I've been looking at and staying away from the drugs.
Okay. Crypto. What about crypto?
Well, I have been all over Ethereum. So Ethereum, I had certainly been vocal about it at around 2,500, that it got through 2,550. This is just good old fashioned charting. It was taking out the major moving averages and was due for a move. And then, of course, all the news came out to support that, the mass adoption. So now, of course, the next level here, 3,600 is your most near-term support. 4,000, everybody's watching 4,000, and we're creeping up today, right? We're back over 38. 3850 as we're talking right now. The trend is up. Again, I think dips are buy opportunities.
All right. Earnings season, we'll let you go after this. Earnings season, mixed, some good, some bad, some ugly here. We still have the big guns to report later in the week. Give us your overall take on earnings season.
Well, so far, of course, it's been the guidance that's been the big thing, right? What people say. I mean, that's what happened with Novo. Not only obviously the shortages of Wegovy, but their guidance was soft. Spotify came down lower, I saw. I'm not surprised. There's so much competition there. I think like this week when we've got Microsoft, I've got keen eyes on Microsoft. That thing has been the comeback party with Microsoft, and it's trading even as I'm talking to you now at like 513 pre-market. This 515 level, I don't see why that's not a $600 stock right now. I mean, how do you fade NVIDIA trading almost 180? This is really where it is. So as we get to these big earnings this week in tech, I don't know if not a chaser by nature, but like I said, what I'll watch is if we get positive reactions to these growth stock earnings. And then some of the other ones that I would be watching, like when retail comes up, it's not going to come up for a while. And then some of the companies that support AI, that's where I'm looking. Stratasys, I'm in that already. CC, Chemours makes the Teflon coating for chips, in that one already. Symbotic has been on fire this year. That's the robotics. That's where I'm going to be interested in. If we get great earnings, that's only going to be good for those companies as well. Energy, I'm really into that. We got a lot of earnings this week with some of the big names, like Chevron, I think, reports this week, and a couple of the other ones, maybe Exxon.
Yeah, both on Friday. Yeah,
right,
both Friday.
This is, right now for me, our models, our quants love momentum. Me, I've always been more of I need to know what my risk is. I think energy, we bought XLE last week at like 86. It's trading at over 88. I think this is really where, if the market's going to hold up, these are the pockets of things that support AI and the energy space that we need for AI. And my biggest contrarian trade right now is natural gas. I mean, I don't know if it can get much cheaper. Maybe it could break down under 3 in the September contract, but it's back up to what, like 312, 314, something like that pre-market. I keep my eyes there. It's just so freaking undervalued right now. And uranium is up to the sky, but we can't use that yet. This is what we can use to power right now. So that's kind of how I'm looking at it. Earnings is what helps the things that I want to buy.
All right. Well, thanks for getting up nice and early to join us. Mish Schneider, CEO over there at Market Gauge, joining us here on Pre-Market Prep, giving us a broad view of the markets. Thanks, Mish, and we'll be talking to you real soon.
You guys have a great day. Thank you.
Thanks, Mish.
Bye.